Let's talk about the liquidity grab or liquidity sweep, the breaker structure, and the area marked back out of zone where it's supply or demand at. Okay, why is that so impactful? Why does it the market move in the opposite direction of, not saying it's going to reverse and continue moving in that direction, just continuously, but we all should know by now that liquidity is one thing that's painted all over the charts. It's the areas in which the market makers, the institutions are thriving to take out, because they have to make money too. They set up traps within the market for us retail traders to be able to get stopped out, and they'll test certain areas to the limits because they know when setting these traps up where retail traders are going to get in at, and that's the trap they set. So if the market is moving in a certain direction and it leaves behind a good area of, say, demand where there's aggressive buying at, okay, so they'll push the market higher, the market to come back to the zone. You get into the trade when you get the rejection at the zone, and then it comes right back. For example, where the rejection happened at, where you got in at the break of the close of the candle, and below that area, they know people are going to, the area where they know people are going to take buy signals at or trades at, they're going to test the bottom end of that area. Especially, they could pull it all the way back to the area where, at the back end of the area of demand. So you have to be mindful of where to get into your trades at. And I talk about in plenty of videos where, if the market is, or if the trade is not working out for you on the rejection, then get out the trade. But today's video is about liquidity sweeps, the breaker structure. Why is it so impactful? Why does it, work? Why should we be looking at those type setups? Let's cover that right now. I'm going to show you a trade example. I did this in a prior video, and I'm kind of recovering the same topic again because I really want to drive this home and show people that this strategy, which is trading supply and demand, and just as well, because we're merging two, not only one strategy but another strategy, which I always trade, breaker structure at a pullback to a key area of supply and demand, but bringing and merging multiple things together. It's all about confluence, right? And it raises the probability of our trades working out in our favor. So when we can bring a couple things together on, I'm already trading multi-charts, meaning multi-confluence set up on certain charts, on higher base and a lower base. If we can do that, and then, we're bringing in, okay, just broke, swept an area of liquidity or took out liquidity, breaking structure in the opposite direction, a pullback to a key area of supply or demand, that just, it sets up those are the ingredients that's setting itself up for a great recipe. So let's talk about that right now. I'm going to show you. Take a look at this trade setup from August the 9th. Okay, that was Friday's trading session. I'm going to show you a prime example. You see the market where it's been moving to the upside, right? Okay, this is on the 120 range, the higher base chart, okay? But what we see is the market is, what is it doing? It's breaking structure high. We have a, if you look at here, let me show you a major high resting above this area at 18,556. And, as it's breaking or moving higher, it's also breaking structure to the upside. As you can see, it's taking out swing highs, 1, 2, 3. So it's pushing higher, and then we come up and break this major high resting up here. Now, if you take a look here around, I don't know, about 4:30, maybe 5 o'clock or 5:30 in the morning, this is still into the London trading session. The market, goes up here. It does grab liquidity at the top end right here, breaking this area, as you see right here above 18,616. Okay, so it pulls back and it breaks this area here. Now it doesn't sweep it doesn't sweep it with the wick of the area of the candle, wicking right above it and then turn around. That's still, anytime that it still goes up and it wicks above a high or a low, that's still the market grabbing liquidity. In this case here, we actually get a close and break above, still grabbing liquidity, okay? All right, it doesn't always have to just sweep it with a wick. When it turns back around after grabbing liquidity, what do we get? We get the fold and breakdown of an area where it broke structured, marking this blue arrow right here. So we got a liquidity grab or liquidity sweep at the top end here. It's breaking structure back to the downside. It's taking out a low. So that's what we want to see. We want to see what the market's either running a high, okay, a prior high, a previous high that it has made, and then it pull back and then breaks the high, and then turns back and breaks structure back, going back lower. So the swing in which it just took out liquidity, will it come back down and break structure back lower? This right here is an area of structure. You can see where it made a high here, a low, lower high. So this is a structural area here, and then it goes back and it runs the high and takes it out at the top end. It grabs it high, runs it by a few points, comes back, takes out that same area structure, meaning taking out that low right there when it pushed lower. Now, that's the liquidity sweep or liquidity grab. What I primarily like to trade is most times is the supply and demand, meaning where we have a aggressive area of selling. In this case here, this was an area of selling. This little small swing right here, okay, to the downside where it broke structure back below, right here below this area here at 18,431. Now, we're talking about bringing in the liquidity grab or liquidity sweep in the fold with the supply and demand setup where we broke structure. This is a supply area right here, aggressive selling to the downside. Now, those that have been following the channel, if you're a first-time viewer, there's something which is very important. One of the most important components to the strategy and how I trade is the gap back at the zone, meaning an unmitigated zone. That's where a zone has not been tested. If you see right here where the market pushed lower right here, it didn't immediately come back up and test this area. So think about a swing where it makes like a V shape to the downside in a sense. Okay, we got a push down, a pull back, and then it breaks lower. So you got, instead of a V going up, you got the V going down. So if you got a swing like that where there's aggressive selling to the downside and the market doesn't immediately come back and test this area, so just look at it right quick. I'm going to show you. We got this movement here, pull back, breaking lower, giving us a V right here, and it doesn't immediately come back and test the zone, but continues pushing lower, and then it breaks this area of structure. Well, it's leaving behind an unmitigated area of supply, which is a untapped or unmarked or gap back at the zone. That's where we want to mark our supply area, okay? So let me do away with these lines right quick. Okay, these arrow lines, all right. Whoops, don't want to do that. Okay, so it comes back to the supply area right there. Then all we're looking for is basically at that point the break and close of the candle. Now this is the higher base chart. If you trade higher base charts, then that's fine. I like to move down to a lower base chart at that time to see if I can get into a setup to where I'm not, if I get into a trade right here, say for example, when it taps back into the zone, I get the break and close. There's so much variance there. We're talking about the break and close below 18,527, and then back up this area here, that's 18,558. So there's a lot of movement right there, points in which the market can pull back. So which means you could take some drawdown if it pulls back and test this area again. All right. Sometimes they'll push the market lower, then come back to stop traders or to scare them out of a trade, and then they move in that direction. In this case here, this is a great setup because we just went up here. We grab liquidity, the top ends right here. The market pushes lower. It does what? It takes out or breaks structure. So it's a liquidity sweep or grab. Okay. First, break structure, and then it created a supply area on the move down with AD in the breaker structure here, and then we get a pullback to that supply area. Okay, so it can happen the same thing in reverse of to where if the market is breaking structure lower, okay, to the downside, all right, as you can see here, just like it was breaking structure to the upside here, if it was breaking structure lower to the downside and then it took out an area or a low, so again it will look something like this right here. Let's say the market was doing this right here, and then we got where it swept liquidity here or took this area here out, and then it comes back up, and let's say this was I'm sorry about that, guys, wrong thing, meaning that, sorry about that, but meaning that, okay, it breaks structure, as it's breaking structure lower, and we take out liquidity right here to the downside right here, and then it comes back up and it breaks this area of structure here. Okay, so this would be in reverse of like how it took out structure on the move here to the downside and took out this low. It took out this swing high right here. So if we took out a swing high after grabbing liquidity, okay, so this side, in this case here, instead of it, where it's breaking lower to the downside right here, you can see the difference of. So we're moving higher here and then breaking structure. In this case here, we're moving lower here and then breaking structure to the upside. Then we have a demand setup resting below. If it's unmitigated or untapped, that raises the probability of the trader working out more so if it gets there. The liquidity grab or sweep followed up with a breaker structure, pull back to a zone where the demand and supply is a great ingredient, or which is makes up for a great recipe is what I'm trying to say. So and moving forward, so then what I would do is once it taps into the zone, I would go down to my lower base chart and look for a trade setup or an entry to get into the trade. Simple as that. Now, one thing to be very mindful of is that in this situation here, we breaking structure, grabbing liquidity, and then we came back and broke structure below. Okay, after grabbing liquidity right here and then breaking structure below, pull back to the supply area. you got to be mindful of price action as it's moving back or retracing back to the zone. I'll talk about that in a lot of videos because, you may have an area where there's a area of structure below you, okay, where it just broke structure back to the upside, and then it could be like here, a demand area here and a demand area right here. That's why it bounced when it got back here, okay, because there were demand areas right here that was created off of where the market here broke structure, where it can reject it and push higher. So just be careful. So once you're into the trade, say here at 27 or 28, you can take the trade back, coming back down to these areas here, maybe at 500 or possibly down here to this lower demand area resting down here at 18,450, 454 or 455. Okay, and that's what it did. It came down there, the lower portion of this high volume area, just as well. What I'm going to do now is move down to the 24 range. This higher, or this bigger rectangle blue box right here, this is the 120 range, the higher base supply area. Okay, again, we broke liquidity or took out an area of liquidity to the upside, broke structure to the downside, pulled back to a beautiful area of supply. Then all I'm doing is moving down to a lower base chart to look for a more precise entry point, or to see, is there a, for example, a supply area within this area here, or this bigger box here off the 120 range chart. So let's blow this up a little bit and see, is there an area? Okay, so first of all, you can see what we want to see is the market retrace back to the zone. It taps into the zone. Now let's see within this zone here, is there a supply area on the 24 range chart? Okay, so in this case here, the market break structure here. All right, we've got now in this case here, we don't have a high probability zone at. Okay, but that's still fine, because even though this is a lower probability zone, we have a higher probability zone on the higher base chart, which means this trade could definitely still work out. Okay, especially if we got a higher base, high probability zone on the higher base chart, which is that bigger blue box. So we'll mark this lower base probability zone, or lower probability zone off the lower base chart, the 24 range chart here. Let's bring this back into focus here and bring it across. All right, because this didn't happen until later on. As you can see, as it starts to retrace back, this was at 8:30, and it finally came back to that area around about 10:15. So we'll drag this across. As you can see now, this would be our zone on the 24 range. All right, even though it's low probability, but again, we have high probability setup that just happened or occurred on the higher base chart. So once we get into the lower base zone there, so we got two zones within, well, we got a zone within a zone, a higher base zone and a lower base zone here. We're going to just kind of blow this up so you can see what happens. At this point, once we get the rejection on the 24 range chart, then I'm just looking for a break and close of the candle right here at 1856. I'll get into the trade, and again, what did this come down to? 500. That's that first area I just mentioned and showed you right here, which is this demand zone right here on the higher base chart. Okay, so if you got in here, say at 18,527 or 28, and took it down here to say 500, you could pick yourself up 20, just say solid, at least a solid 20 points or 25 points right there. And then maybe you held it on to the next demand zone resting below here at 455. That's 18,455, and that's where the market goes. It pushes lower, comes on down a little lower than that, and then starts to move back higher. So all this is finding a high probability zone, especially where you have a liquidity grab or sweep at, and then it's breaking structure on the higher base chart. All right, mark your zone on the higher base chart, and then just move down or scale down to a lower base chart to look for a more precise entry point. In this case here, we're looking for a supply setup on the lower base chart, the 24 range chart. Hard to see. I'll blow it back up again, but this is a zone within a zone after a liquidity sweep, okay, and then the break of structure, and then a pull back to supply. The bigger box is that 120 range supply zone, okay, and then this lower box here is this, or the smaller box is this 24 range supply zone within the 120 range, where we just went down, moved down, and scaled more into and refined our zone, okay? So hopefully that makes sense. Practice that. Look for setups like this. You have lots of things going on here. Again, the liquidity sweep or liquidity grab, the break of structure, plus a nice, in this case here, supply, but it could also be in reverse where it was actual demand setup. So hopefully that makes sense. But anyways, I appreciate each and every person that watches the videos. I make this video content so that, to inspire other individuals that trade supply and demand, but not just that. Anyone that trades the future markets, it doesn't matter if you trade, the indices or commodities or the financials like the bonds, whatever it may be that you trade. It even works on Forex, okay? Trust me, it works on Forex just as well, or options. You just have to understand and be able to read market structure. That's very important. So that's why I make this video content, is to, just kind of inspire other individuals. But if I make lots of videos like this surrounding trade breakdowns, okay, to where I go into detail about the trade setups. I post them, my trade setups that I do take, or I post them on the Discord, okay? I don't post every single one of them, but of course, the Discord is a community for you guys to come over and share your own trades as well. And it's a free community if you're interested in joining. The link is right down in the description portion of the video. Click on it and invite yourself in as well. If you're interested in getting more into the actual trade breakdowns, to where I'll walk you through trade setups in reference to where to place your stop losses, where to place your profit targets, just basically giving you and running down, talking about the strategy as a whole and breaking it down trade by trade, then you could join. I highly recommend it for those that want to, and become an elite member. That link is right down below in the description portion of the video, right below the Discord link. You click on that and 2 tiers will pop up. Make sure to choose a tier for $6.99 a month. That's all it is, okay? That's going to give you the access to the trade breakdown videos, the video playlist. That's a link by link series of videos that I have pulled out or off the channel that are impactful and highly imperative videos that cover the strategy more in depth as well. So that, I'm always pushing the strategy because it works. It's all about confluence when we trade. The more confluence we have on our side and looking for a setup, more so the trades works out. Now, I'm not sitting here and saying trade in front of the charts and sit in front of the charts, from 9 to 5 or all day. Just take a few setups. Sometimes just 2 trades is all you really need. When you start getting over 3 trades, then you start putting on risk of, at some point, not every trade is going to work out, and you don't want to give your profits back to the market. So if you made money off one trade, then close shop, okay? Close the computer down, especially if you made a decent daily living off of one trade setup, or maybe 2, and close it down, okay? Wait for the next, there's another day coming around the corner, so just kind of back out. Don't keep trading and sit in front of the charts all day long. But I'm not here to tell you what to do. I'm just telling you. But yes, I do provide other content for those that are interested in getting more of an in-depth view about the strategy as a whole. When it covering supply and demand and how I actually trade it. And great videos. Lots of people have learned from the videos and are doing well themselves and are part of the Discord community. So for $6.99, you definitely get your money's worth. I'm not talking about $699. I'm only talking about, pennies on the dollar, $6.99. And I thank every person, each and every one of you that are supporting my efforts as a content creator. And that's what you're doing by becoming an elite member. But I'm also giving a whole lot more value back. You're getting a whole lot more for a very nominal fee. Okay, so again, that link is down in the description portion of the video. If you're not a current subscriber, please take the time to go ahead and sub by clicking on the sub button. Make sure to turn your post notifications on if you definitely want to receive all the video content each time that I post, so that you get updated real time. But outside of that, if you found value in today's video, again, we're talking about the liquidity grab, the breaker structure, and then a pull back to that key area of demand and supply where there's a gap resting at. That's going to increase the probability of the trade working out. I definitely would like it if you drop a like on the video. Take care, and I'll see you all in the next one.